Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Monday, October 31st. Happy Halloween. It is 6:56 as I'm starting the video. And as always, please run that player at 1.5x. Quick look at futures. Bitcoin's up about $100. Oil's down 1.5%. Equities are red, but not markedly so. I've got them down about 0.5%. Over on the macro front today, we've got Chicago PMI and Dallas Fed. But then Wednesday, we've got the FOMC rate announcement at 2 o'clock, followed by J. Powell presser at 2:30. Got the October jobs report on Friday. And then we've got the election on Tuesday. Elsewhere in world news, Russia is looking to suspend that grain export deal they had with the Ukraine. So all the grains are up today quite significantly. That's maybe something to watch. Had a hard time timing that. I tried a couple longs on wheat and corn. Really ended up consolidating and not really working, but we'll see if we can get a sustained breakout there on grains. China has also ramped up its COVID lockdowns, which is weighing on oil. And Brazil had a election over the weekend where they went hard left. So they got rid of Bolsonaro, who was on the right, and elected leftist government. The guy was actually the president back in the early 2000s, so he's coming back for a recycle. You may want to keep an eye on EWZ. That's the country ETF for Brazil. I don't know if there'll end up being a trade there based on that, but something to watch. Over on the earnings front, we've got ON Semiconductor and XPO Logistics this morning. Those were a couple that jumped out. And then after the bell, we've got NXP, Semis, Avis, Goodyear, and Stryker in the medical technology space. So, had a really interesting day on Friday and really an interesting week taken as a whole. And I think you gotta respect a market where, when on the face of it you expect or should think something should happen, and it does the opposite. What do I mean by that? If you look at mega cap tech, every one of those stocks missed on earnings, right? And all of them traded down as the initial reaction. And yet, all the markets finished higher for the week, including the Qs. And we saw big reversals on Friday. Amazon, of course, was decimated on its earnings on Thursday night. Apple traded down. Both of those did moonshots out of the hole. And even the other names, not so much Meta, but the other names traded up on the week after their earnings reported. So, as we were talking about, we had really a lot of poor sentiment, a lot of bearish positioning. We had talked about trying to hit at least a short-term bottom. We had good lines to shoot against. We had good pivot points we were watching, and those panned out. So now we're coming into November, which is seasonally a good period for stocks, and we're just going to have to see. We've got a ton of catalysts coming up. I mentioned J. Powell on Wednesday. We've got the jobs report on Friday. we've got the election on Tuesday, and then we've got Jay Powell again in early December. So we got a lot of stuff going on. But what I'm saying is that on a week where the bears basically got what they expected, namely disaster earnings out of all the biggest names in the market, they could not break it. And I think that's significant. So let's run through our deck and see what we can see. US dollar broke trend, hit support, and now is back testing the breakdown, that very common move. And now what we want to watch for is it a breakdown, back test, fail, where it heads lower, or is it a fake breakdown where it reclaims the uptrend line, reclaims lateral support here at 111, and then starts to move higher again? So we're at an important pivot on the dollar, and I think that bears worth watching. Same thing on TLT. We had the panic low and then have raced up to this 98 pivot point. And if you'll recall, that was a level on the weekly chart that was a support level. So the very same technical analysis applies. You know, breakdown, back test. Does this reject and fall away? Or is there follow through to break out above 98, take out the downtrend line, and move higher? You can see that we've reclaimed the 8 EMA, and we've got the 20 EMA coming in here at 98.40, let's call it. So I think that should be an area to watch. But even if you're not trading it, just look for intraday trends. You know, what is the dollar moving higher or lower? Is TLT moving higher or lower? And then we move on to the VIX. And remember, we have been watching this thing the whole way. We said above 30 it was going to be tough to be, you know, kind of structurally long with duration. But then we really got a 4-day breakdown, big moves, moving from over 30. Remember, we closed below 29 early in the week, and then it has fallen away dramatically, and now we're down here under 26. Now the next level that I have as a pivot point is going to be this 25, and if we break 25, I would say the door would be open to come down and test this gap here at 22.25, give or take. Doesn't mean we may come down here to 25, hesitate, or even bounce, a little pullback day kind of thing, and then break it. But this is certainly moving into bull territory, where I think even back here we said you either got to step aside or be long. You really did not want to be short as the VIX was falling. So that has worked out pretty well. Bitcoin has slowed down, but still maintaining its breakout. I would still use the 50 as a major pivot on the chart, coming in right here at about 20,000. Oil was down, energy was down on Friday, but we have not lost the pivot point on WTI. Of course, it was red this morning. I think you want to key off of 88 on WTI. Actually, Exxon reported blowout numbers on Friday morning, and it took a dip off the open and then fought back towards the highs at the end of the day. So Exxon, at least. I haven't looked at it this morning, but I think that trade remains intact. We'll have to see if those COVID lockdowns in China really weighs on oil and pulls the energy complex down. Gold. This is GDX. Gold miners could not get the breakout. I still have my alarm set and ready to go at 25.50 if and when that breakout happens. Really, the most concerning thing for bulls here are the oscillators that are blown out to the upside. We know from experience, going back years and years and years, it's not going to be able to hold this. Whether it holds it for a few days or whatever, it's going to be coming down. So I would keep your longs on a very short leash and be ready for just an overbought kind of reversal. I do not like this up here, and as you know, if you've been with me for any amount of time, every time you think it's different, it's not. Overbought, they bring it back. So as bullish as the setup is, I think we should be ready for a quick little pullback whenever that may be. Now, can we go up to 105? Sure. We've seen instances where the oscillators can go higher, and just remember that's the rubber band effect. You just keep stretching, and it eventually breaks. Not as much here on the NASDAQ oscillator. I mean, we're at 70. You can see still overbought conditions. Certainly a place to have some caution. Moving on to SPY. Big candle on Friday, up 2.4%. We're right into this 50% retracement level. You see it here. And I think that's going to be the level to take out between 388 and 390. Notice this was a level way back when where we had a lot of rejections along this line, and then we had support right in here at that 50% level, and now we're back to that level here. So we're at definitely a critical spot on the charts on SPY. Taking it down to the 60-minute. Here we've just got an exploded view of the price action, and I think you can use this 388 as an active pivot this morning, as long as it can hold 388, 387.50. I think the bulls are fine. We are back at the midpoint, so we've got we've actually got three resistance levels. We've got the midpoint. That's one. We've got the 50% retracement level. That's two, right at 388. And we've got lateral resistance as well. So could be a tough nut to crack today. But if it can manage to hold that, then things will stay bullish. If we drop down below, say 387.50, good chance that it rolls back down to the bottom of the uptrend channel. And on Friday, I always like to kind of recap when it's clear what you could have done. You had a recapture level right here. It opened low and then recaptured the 50, and then that was your very objective buy early in the morning, and then it just never looked back, never, no shakeout candles, no, it was just a trend day right out of the gate. And like I said, I think I sent out a midday note. These are the magic eraser days where, you spend, time getting chopped to pieces in some of these little periods. And then all of a sudden you get the move you've been waiting for, or it just turns out that way, not necessarily waiting for it, but you get an easy day that, if you got the entry, there was really nothing left to do until the end of the day where you go to the bank and just decide, do I want to hold anything over the weekend or not? So in these active trading sequences, you take your objective, you take your shots, you take your objective longs or your objective shorts, and then you wait to see what happens. And you don't know this is going to happen, right? It's easy to look back and say, oh yeah, exactly, God, what a move. Had I only known, right? Well, you don't know and you'll never know. The point is, you had an objective entry on the recapture of a key level from below. You knew you had a good place to set a stop. You were at the bottom of the channel. You recaptured the 50, very objective, and then you got a nice move out of that. The Qs. As good as Friday was, we still have not taken out the 50. So, as far as technical moves and technical levels, I think you got to get above the 50 for the next kind of all clear kind of move. You've got some levels that rejected back here, and you can see we're still very far away from the comparable level on SPY at 295. So we got a ways to go on the Qs. And, as long as it can hold 280 today, I think the bulls are fine. But realize there'll be resistance at 285 where lateral and 50 EMA resistance comes into play. On Friday, we had the down open and it quickly reversed. Here was the old gap. That's why I leave these levels in there at 275. You had your objective buy, and then you got the move. So you can see, you've got support in here between 280 and 279-ish kind of level. As long as it holds the bottom of the channel and holds the old top of the gap, I think longs are fine. And you can see the resistance here at 285. IWM has been outperforming. We're already well past this comparable level that we've been showing. We had 170 as our major pivot early in the week. We recaptured the 8 and 20. We recaptured this. Well, let me just go to the 60-minute chart. It's easier. Yeah, we were down here, and we recaptured that pivot early in the week, and that was our signal to get long at the midway point of this $12 wide channel. And then we got a move halfway up to 173. We took that out, got the second half of our $6 move. Then we broke out of that $12 wide range. That gives us a target of 188. We got a $3 move here. Then we got another $3 move, consolidation, and then we broke out late in the day above 182. So now we've got another, so that's 6, right? 6 added on to 176 is 182, half of the measured move, and now we've got the other half to go. $3 up to 185, and then the final part of the measured move would be 188, and then at that point I'd imagine you'd fill the gap up to 189. So a real nice clear example of measured moves playing out as expected. And so those have been real nice benchmark levels along the way, and we'll just have to see if we can get the final $6 measured move out of the whole thing. Meta, I've got the daily chart here. Got our bracket trade set up. You can see that pretty wide range of the bracket, about $6 from 96.40 to 102.50, and then we've got a huge gap above left to fill. And then on, I think it was on Friday, maybe Thursday, we talked about this is a massive support level down at 90 on the monthly chart. So using our bracket rules, you can either buy at the bottom of the bracket and see if you can get to 102.50, or if price breaks above and into the gap, then you can follow price above 102.50 and see if it can make it all the way to 130. So that one's on the board. Apple had the big reversal after its bad earnings, and a lot of this happened in the pre-market to get going, but you had a chance to buy this at 148.50, either saying, number one, I reclaimed a level from below, a lateral level, or I reclaimed the bottom of the uptrend channel. And remember, when you have excursions below an uptrend channel and then you recapture it, it's just like a trading range. The measured move or the expectation is you go to the far side of the channel, and you don't expect it to happen in one day, but that's exactly what happened. And even if you did not get it here, you certainly had a chance at 150.5 to buy. You had a chance at 152.5 to buy, all the way up. You're probably, I mean, there were levels all along the way. Once it does this, I could see how somebody would be, thinking to themselves, oh, I missed the move. And you did miss a large part of it. But always remember that even after a significant move, if you've got an objective place to buy, you can buy it there and then just set your stop below. So when these moves were being made, this was, even though it was all the way up here at 154.5, it was still objective. That's my point, that you recaptured a level from below. That's an objective buy, and then you got, $3 out of it. Now it did come back, but you reached the top of the channel. So, I mean, from a technical standpoint, in an active trader standpoint, it was each level was very logical, even though the whole picture was illogical, right? Not so hot of an earnings report. Oh, that's going to trade down. And this was another example of when what you expect to happen doesn't. You gotta respect that kind of move. Tesla kind of took the day off. It was up 1.5. I think just from a technical standpoint, as long as it holds this support band from 222 to 225, the longs are in good shape. Now the next technical target is back up here at 235 at this high and this low. So 235 is your next big pivot above. But as long as it, as long as it holds 222 to 225, I think the bulls are in control. Microsoft opened low down here at 226. We had a line in the sand at 228. Remember this, I believe there was an old gap in here, but I had marked the levels. We certainly knew that 235 was a big pivot on Microsoft, and we knew that a recapture of 228 was going to be the lower pivot level, the objective buy. So we had an undercut here at 226, and then when you got the recapture at 228, that was your objective buy, and it never looked back. It came up to 235. You'd expect a hesitation there. Why? Because it's at the big pivot, and it actually had the power to break above. So now we've got a big gap above, and we're above the 235 pivot. I think as long as 235 holds, the longs are in good shape. Amazon probably would have been a harder trade to take, other than the fact that you had a gap lower, which I haven't filled in. I need to move that over. But if you notice down here, when you got a candle that moved into the opening gap, that was an objective buy. But 102, I'm going to show you the daily chart. 102, 102.50 was a level of huge support back in the day, and which makes it the major pivot, right, on the daily chart, recapture of the lows. So going back to the hourly chart, I think you can stay long north of 102 because that's where the low was recaptured. And now we've got an open gap all the way up to like 110, actually 111, 110.96. So there's a big gap there to fill. And actually, I was talking to some people, longer term investor types in the trading room. And, if you had a long-term bullish view of Amazon, you're certainly at a great trade location at 102. Those were the previous lows. And as long as those lows hold, then you're in real good shape. If you wanted to take a longer term view, stay long against 102 and see what happens. And if you've got more of a risk tolerance and you wanted to go farther out into time, you've definitely got a low here to shoot against as well. So if you were willing to take, $4 worth of heat for potentially the low being in, then you can trade it that way as well, whatever you want. Google found a low. Actually, looking at the daily chart, we had a 191.50 measured move target breakdown on the daily chart, and we actually fell just shy of getting that. We had a low of 92, so we fell shy of that. It reversed and moved up. I think now on the hourly chart, we've got a great pivot here at 96.50. That was the breakdown level of this big trading range. You can see the line of support here. So now this is resistance at 96.50. The question now, you should recognize this pattern: breakdown, back test. Is that what it is? Do we reject here and head back down, which is a common move, or do we break out above 96.50 and then this area here looks like a bear trap, right? We broke down, everybody gets bearish, then it reverses, and if we break above 96.50, obviously anybody that tried to short in this area will certainly know that they were wrong and be forced to cover, and then that's where you get that bear trap moniker, if you will. So really critical spot on Google. Netflix, no juice on Friday, which was a little bit unusual given the overall market strength. I think we're right here in the middle. Kind of hard to take a position. What I would be looking for is either a back touch of the 200 here at 190 for an objective buy, or a breakout above 300 as an objective buy. If you lose, if the market starts to fall apart, if you lose the 200, then that's your objective short, and you're looking for a $10 move back to the bottom of the gap here at 280. Semis been toggling in this area between 185 and 190. Got the breakout above 190, so now the upside target is 195, and then you got a $5 gap up to 200. If I was sitting long, I would be shooting long against 190. If you lose 190, then chances are it rolls back down to 185. So you've got a really nice clear pivot there at 190 to use in your active trading. Moving on to ARC, you're right here at the pivot, 1675 or so. You're above the 50. You get the breakout there, then you can go to the top of the box. You've got a beautiful pivot there on the daily chart, right there in the middle of the trading range. Genomics, exactly the same chart. Tested the bottom of the trading range, rejected, right back up. You've got a nice pivot there at 34.25 that you can use today or in the days ahead to either have an objective short on a rejection or an objective long on a break back into the old trading range, and then your target is going to be approximately $2 higher. Flagship fund still has not gotten back up to take out the bottom of the box at 40. I think that's your pivot. Notice you've got 50 EMA resistance here above. I think Tesla still remains a large part of this ETF. Of course, you can go to any, ETF.com or whatever and find out the highest percentage holdings of ARK. I know she does a lot of trading and jockeying around positions. You may want to go, if you're a big trader in ARK-K, find out what those large components are, and then take a look at those charts as well. This is just an aggregate of all those holdings, but regardless of that, it needs to get above 40 to open a path to much higher prices. And lastly, ARK-W, very much the same in the sense that trying to get over the 50 here at 49 is where your 50 is at. So I would use that as your pivot point today. So very bullish price action, not typical of what you'd expect after all those disappointing mega cap earnings announcements. They all reversed. Got a lot of macro ahead of us. Watch the dollar, watch the VIX, watch TLT, and keep in mind those big yellow flags on those oscillators. I wouldn't be at all surprised to have either a hesitation or a pullback here, just based on those oscillators being so far extended to the upside. And as always, no matter what you're trying to do, respect your stops. That way you won't get hurt. So if you're new here and you appreciate technical analysis and a little game plan every day, hit the subscribe button, the alarm bell. You'll get that YouTube notification content. And also look over in the show notes, find the link to the blog site where you can drop in your email address. It takes all of 15 seconds. And that way all my content will arrive in your email box. And we'd be glad to have you. And you'll also get an invite to our trading room. And it would be great to have you there. So let's wrap it up there. Let's see what today brings with the FOMC on deck on Wednesday, and we will take it from there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.